China's gold market just collapsed, and 3 days ago, the Supreme Court of the United States handed Donald Trump one of the most humiliating legal defeats of his presidency. Here's what nobody's telling you. These two events are not a coincidence. This isn't about gold prices. This isn't about Chinese speculators losing money. This is about a geopolitical chess match that China spent years quietly winning, while Trump spent years loudly losing. And from a prosecutor's perspective, Trump just walked into the most perfectly constructed trap in modern economic history. Pay attention to what happens next. Let me walk you through this from the beginning, because the full picture is staggering, and the mainstream coverage is only showing you one piece of the puzzle at a time. On February 20th, 2026, just 3 days ago, the Supreme Court of the United States issued its ruling in Learning Resources Inc. vs. Trump, case number 24-1287. In a 6-3 decision, the court struck down the sweeping tariffs that Donald Trump had imposed using the International Emergency Economic Powers Act, what the administration called IEEPA. The court's holding was blunt and unambiguous. IEEPA does not authorize the president to impose tariffs. Full stop. The legal instrument that Trump used as his single most powerful economic weapon against China, against the European Union, against virtually every trading partner on earth, was declared unconstitutional. Gone. Struck down by his own Supreme Court, a court that includes 3 justices he personally appointed. Think about that for a second. 3 of his own picks helped dismantle the centerpiece of his entire economic agenda. That is not a political setback. From a prosecutor's perspective, that is the legal equivalent of a defendant's own alibi witness, taking the stand and destroying the alibi. And Trump's reaction? He called the ruling terrible. He called the justices fools. And then, within hours, he scrambled to impose a new 10% global tariff through a different legal authority before trying to bump that number up to 15%. That is not the behavior of a president with a plan. That is the behavior of someone in a panic. But here's where it gets dangerous for Trump. Because while all of this legal chaos was unfolding in Washington, something else was happening simultaneously on the other side of the world. Something that tells a much deeper story about who actually won the trade war. China's gold market erupted into what Bloomberg called, in print, the most volatile month in precious metals history. January 2026, record highs, speculative frenzy, and then in a single Friday session, gold plunged 9%, its worst day in over a decade. Silver collapsed 27%, the biggest single-day drop ever recorded for silver. Chinese funds were halting trading. The eFund Gold Theme Fund suspended new subscriptions entirely to quell heated sentiment. China's sole silver futures fund was locked in a trading halt after hitting its 10% daily limit for 5 consecutive sessions. So what is actually going on? Let me walk you through the layers, because this is where it gets genuinely explosive. Here's the surface story that everyone's telling. Chinese retail investors, ordinary citizens, went on an extraordinary gold and silver buying spree throughout 2025 and into early 2026. Chinese gold-backed ETF holdings more than doubled since the start of 2025. Leveraged speculative positions reached what capital economics described as elevated levels, consistent with a speculative bubble, not a fundamental safe haven trade. The prices became detached from global supply and demand reality, and when news broke that Donald Trump was planning to nominate Kevin Warsh to lead the Federal Reserve, a move that spooked markets about future interest rate policy, the speculative positions unwound violently. The bubble popped. That is the surface story, but pay attention to this next part. The reason those Chinese speculators were piling into gold in the first place, the reason ordinary Chinese citizens converted their savings into precious metals at a rate that doubled ETF holdings in a single year, was because of Donald Trump. Not despite him. Because of him. His tariffs. His trade war. His economic aggression. When Trump imposed tariffs of 125% on Chinese goods at the height of the trade war in early 2025, he didn't just damage the Chinese economy. He terrified Chinese citizens about the stability of their own financial future. He accelerated a loss of faith in paper assets, in dollar-denominated instruments, in anything connected to a global financial system that Trump was actively weaponizing. Let that sink in. Trump's own tariff policy, the policy that just got struck down by the Supreme Court, is directly responsible for triggering one of the most destabilizing speculative frenzies in Chinese financial market history. He lit the fuse, and then the bomb went off on his watch. Now let me take you to a deeper layer, because this is where the real story lives. While retail Chinese investors were creating this speculative bubble that we all watched, China's government, the Chinese state, was doing something entirely different and far more calculated. China was buying physical gold in secret, not in the amounts they were reporting, in amounts that may be 10 times larger than the official numbers. Let me give you the documented evidence for that claim because this is not speculation. Kitco News, one of the most respected precious metals publications in the world, reported in November 2025 that China's off-the-books gold purchases were, quote, likely 10 times higher than the official figures. The official number China reported to international bodies for its 2025 purchases was approximately 27 tons, 10 times that would be 270 tons in a single year, and those estimates may themselves be conservative. Here is what Reuters confirmed, and this quote is important. Reuters reported that future plans to buy gold for China's state reserves are a state secret. A state secret. The world's second-largest economy is hiding its gold accumulation strategy from the rest of the world, and this is now confirmed by Reuters. The official number Beijing reports is 306 tons, but Jan Nieuwenhuis, a gold market analyst at Money Metals Exchange, estimated and published analysis that China's true monetary gold reserves stand at 5,411 tons, more than double the official figure. If that estimate is anywhere close to accurate, China has been running one of the most consequential covert financial operations in modern history, directly under Trump's nose, for years. Here's what nobody's talking about. China isn't buying gold because it loves shiny metal. China is buying gold because it is building a sanctions-proof economy. After Russia's invasion of Ukraine in 2022, the United States and its allies froze approximately $300 billion in Russian central bank reserves, money that was held in dollar-denominated accounts in Western banks. It was the most aggressive use of the dollar as a financial weapon in modern history. And China watched. China took notes. China said to itself, "This can happen to us." And then China started buying physical gold at a rate that, according to multiple independent analysts, far exceeds anything they've publicly disclosed. Think about what this means. The entire premise of Trump's trade war was that America held the leverage. America had the dollar. America controlled the global financial system. If China misbehaved, America could freeze them out. That was the theory. The tariffs were the bludgeon. The dollar was the implicit threat behind every negotiation. China spent years, quietly, methodically, dismantling that leverage, and gold was the primary instrument. From a prosecutor's perspective, this is what we call consciousness of guilt through preparation. When you see a party to a dispute quietly, secretly doing everything possible to insulate themselves from the consequences of your actions against them, you have to ask, what did they know? And when did they know it? China knew exactly what Trump's economic war meant, and they prepared for it at a scale that Trump's administration apparently never anticipated. But here's where it gets dangerous for Trump, again. Let's talk about the tariff ruling, because the legal implications here go far beyond trade policy. The court's decision in Learning Resources versus Trump was grounded in what legal scholars call the non-delegation doctrine. The core principle is simple. Congress makes the laws. The president executes them. Congress cannot hand the president a blank check of legislative authority, and the president cannot use a vague emergency statute to claim powers that the Constitution reserves for Congress. The court held 6-3 that IEEPA, the International Emergency Economic Powers Act, is not a tariff statute. The president overstepped. Now think about the historical parallel, because this is critical context. In 1952, President Harry Truman seized the nation's steel mills during the Korean War, arguing that as commander-in-chief he had inherent authority to take control of critical industrial infrastructure to support the war effort. The Supreme Court struck him down 6-3, Youngstown Sheet and Tube Company v. Sawyer. The court said the president's power is not unlimited, not even in an emergency, not even in wartime. Trump just became the new Truman, but without Truman's historical redemption. Truman, for all his overreach, was trying to supply American troops in combat. Trump was trying to protect his political brand, and his own court told him no. And here is the devastating aftermath. The New York Times reported on February 19, 2026, one day before the Supreme Court ruling, that in 2025 the United States trade deficit in goods reached a record high. A record high. Despite tariffs that peaked at 125% on Chinese goods, despite an entire year of trade war, the deficit got worse. American exports to China also fell, including soybeans, meaning American farmers, the people Trump specifically promised to protect, were hurt on both sides of the ledger. The tariffs failed economically, the tariffs failed legally, and they failed strategically because CNN reported on February 23rd, today, that the Supreme Court's tariff reversal has, quote, cemented China's upper hand heading into a critical summit between Trump and Xi Jinping planned for April. Let that sink in. China is going into the most important trade summit of Trump's presidency with the leverage advantage, record $1.2 trillion trade surplus in 2025, gold reserves building toward a sanctions-proof financial architecture, and Trump walking in with his primary legal weapon stripped away by his own Supreme Court, scrambling to impose a hasty 10% replacement tariff that experts say is a fraction of the leverage he once wielded. Pay attention to this next part. There's one more dimension to this story that nobody in the mainstream press is connecting, and it goes directly to the question in our title: what is China hiding? We've established that China is hiding the true scale of its gold reserves. That much is now a confirmed state secret. But here's what else they're hiding, and it's directly connected to the supply collapse you're hearing about. On January 1st, 2026, China implemented new export restrictions on silver. New restrictions, effective immediately at the start of this year. Silver is not just a precious metal. Silver is a critical industrial material used in solar panels, electronics, electric vehicles, and defense technology. China is the world's largest silver producer, and China just tightened its grip on that supply precisely at the moment when global demand was reaching historic levels. The result? A supply squeeze, a tightening of available physical silver on global markets. And when speculative positions in China collapsed in late January, the unwinding of those positions hit an already stressed physical market like a freight train. Silver dropped 27% in a day. But here's what the silver export restrictions tell you from a strategic perspective. China is not just hoarding gold for financial protection. China is locking down its critical mineral supply chains at the same moment it is building its gold reserves. This is an integrated strategy. This is preparation for economic independence, or depending on how you read it, economic warfare. And Trump's administration, which spent a year loudly bragging about how they were crushing China with tariffs, apparently missed the forest for the trees. Here's what nobody's talking about. The Trump administration's entire trade war theory rested on the idea that China needed access to American consumers more than America needed access to Chinese goods, that China would eventually capitulate, that the pain of tariffs would force Beijing to restructure its economy on American terms. What actually happened? China's overall exports expanded more than 5% in 2025, despite tariffs, because China redirected its trade flows through Vietnam, Malaysia, Mexico, and other markets. China's total trade surplus hit $1.2 trillion, a record, and China spent the entirety of 2025 quietly diversifying its financial reserves away from the very dollar-denominated system that was supposed to be the source of American leverage. From a prosecutor's perspective, this is what we call the unraveling of a theory of the case. Trump had a theory. Tariffs would hurt China more than America. China would negotiate from weakness, and America would emerge with a better trade deal. The evidence now directly contradicts every element of that theory. America's trade deficit grew. China's surplus grew. Trump's legal authority was struck down, and China is heading into April negotiations with more leverage than when the trade war started. Think about what this means for the American people. Every product with a tariff attached to it, and after Trump's scramble to impose new 10% levies following the Supreme Court ruling, those tariffs are still in effect in modified form. Every one of those costs gets passed to American consumers and American businesses. The Peterson Institute for International Economics has documented that tariff costs are overwhelmingly borne by domestic importers and consumers, not by the exporting country. Trump promised a trade war where China pays. What actually happened is documented in the record trade deficit numbers. Americans paid. Now let me bring this home because I want you to understand the full weight of what we're watching in real time. Here is the pattern, and from a prosecutor's perspective, a pattern is evidence. In 2018, Trump launched his first trade war with China. China retaliated. American farmers needed a $28 billion bailout, funded by taxpayer money to compensate for the loss of export markets. The trade deficit grew. Trump declared victory and signed Phase 1 of a deal. China never fully complied with its commitments under Phase 1. Trump didn't enforce it. In 2025, Trump launched the second, far more aggressive trade war. Tariffs hit 125%. China retaliated. The trade deficit reached a record high anyway. The Supreme Court struck down the legal authority behind those tariffs. China built its leverage higher than ever before. And now Trump is going back to the negotiating table, this time without a constitutional basis for the tariff weapon that was supposed to be his greatest source of power. There is a word for doing the same thing twice and expecting different results. And from a prosecutor's perspective, when you see a public official repeatedly using failed strategies while claiming success, while the documented evidence shows failure, while ordinary Americans bear the cost? That is an accountability question. That is a question that deserves a public answer. Here's what the gold market is actually telling you. Gold doesn't lie. Gold doesn't have a press secretary. Gold doesn't hold rallies and ask the crowd how great the economy is. Gold prices are a real-time referendum on confidence in governments, in currencies, in institutions. From Donald Trump's inauguration through the end of January 2026, gold nearly doubled in price, surging from around $2,600 an ounce to a record $5,600. Silver rose nearly fourfold in the same period. That is not a sign of a thriving, stable, well-managed global economy. That is a flight to safety. That is the global financial system in aggregate saying, we don't trust what's happening in Washington. We don't trust the economic management of the most powerful country on earth. And we are moving our wealth into something that cannot be printed, cannot be tariffed, and cannot be taken by executive order. China understood that signal before anyone else. China started accumulating gold, quietly, secretly, in amounts 10 times larger than officially reported, before Trump even returned to office. Because China understood that Trump's economic nationalism, whatever its short-term disruptions, would ultimately undermine faith in the dollar-denominated system. And China positioned itself to benefit from exactly that outcome. The Supreme Court's ruling last Friday did not just strike down tariffs. It confirmed something that China had been betting on for years, that Trump's economic aggression would ultimately exceed its legal limits, that a man who has shown across 2 terms in office a consistent willingness to push executive power past its constitutional boundaries would eventually be told no. The gold market didn't wait for that ruling. The gold market priced in that outcome long ago. And China loaded up on physical gold, on silver export controls, on a trade surplus of $1.2 trillion, all of it, before Trump's legal defeat arrived. Let that sink in. So when you ask what China is hiding, the real answer is not just about gold supply data. China is hiding the full scale of its preparation for a post-dollar world, a world where American economic hegemony is no longer guaranteed, no longer reliable, and no longer enforceable by presidential decree. And the evidence that China was right to make that bet just arrived in the form of a 6-3 Supreme Court opinion filed on February 20th, 2026, in the case of Learning Resources, Inc. vs. Trump. The gold market collapsed. The silver market crashed. Chinese funds halted trading. And 3 days later, the Supreme Court handed the President of the United States a ruling that called his primary economic weapon unconstitutional. These are not separate stories. This is one story. It is a story about a geopolitical confrontation that Trump bet everything on winning and lost. It is a story about a country that quietly and methodically prepared for that outcome, while the White House held press conferences about how much pressure China was under. It is a story about gold prices that nearly doubled in 1 year, not because the economy was strong, but because the global market was buying insurance against the uncertainty that this administration created. Multiple investigations remain ongoing into Trump's trade practices, his use of emergency powers, and the economic consequences of his tariff regime. A $133 billion question, potential tariff refunds to American importers, now hangs unresolved after the Supreme Court ruling, according to NPR. The April summit with Xi Jinping is approaching, and Trump will walk into that room with less leverage than he had the day he took office the second time. Stay informed. Watch what happens next, because the gold market, the Supreme Court, and China's secret reserve strategy are all pointing in the same direction, and it is not the direction Trump told you it would be. More truth and accountability.